Today we are going to look at a series of coincidences that seems to show us that FTX was just a vehicle that was set out to crush the cryptocurrency ecosystem, while simultaneously using it to funnel money to political groups and their hidden agendas. Could this be true? Well, that's up to you to decide. Let's dive in. Corruption, greed, fraud, bribery. We all know FTX's story by now, but what if that wasn't just the story for FTX? Is FTX being used to further a bigger agenda? To make people fear crypto and crush it once and for all? Let's tease this apart and see how a bunch of professors, college kids, government officials, government regulators, and many more were all involved behind the scenes. The big question to ask is, how did a group of college kids that held no prior jobs build the biggest crypto exchange in a matter of 3 years? How did they fool seasoned finance professionals and evade all the red flags everyone should have seen coming from a mile away when they did their due diligence? It's unheard of and shocking, really. We'll begin by looking at the people behind all of it, and then we'll look at the operations of FTX over their short lifetime. It starts with politically connected people who all happen to be connected to each other in one way or another. Let's begin with the bankman-frieds. On April 25, 2019, Biden announced his presidential campaign, and not just 13 days later did Sam Bankman-Fried, son of Barbara Fried and Joseph Bankman, launch the FTX crypto exchange. Barbara Fried happens to be a Stanford professor and co-founder of the political fundraising organization Mind the Gap. Mind the Gap is a Democratic fundraising organization. Barbara is also an attorney who oversees distributive justice in the areas of tax policy and property theory tax. Surprisingly, the FTX exchange magically became an overnight success, and SBF became one of the biggest donors to Biden come election day. Then there is Joseph Bankman, Sam's father, who is also a professor of law, works at Stanford, and has a role in tax structures for Silicon Valley startups. He suggests to the government how they might control the use of tax shelters, and also testifies before Congress and other legislative bodies on tax compliance. He runs initiatives to end cash and crack down on tax fraud. So both of Sam's parents are professors that are involved in law, tax code, and they are collectively massive donors for the Democratic Party. They are considered bundlers and gather large amounts of money and donate them to super PACs. Next up is Gabe Bankman-Fried, who is the brother of Sam, a former Wall Street trader and a founder for an organization called Guarding Against Pandemics. Gabe was a legislative correspondent for the U.S. House of Representatives and is also an advisor to large political donors in the Democratic Party. Gabriel is also very politically motivated and in 2022 supported legislation that increases government investments in all things pandemic related, including more policies, more regulation, and proposals. It is also looking for a $30 billion allocation in federal funding. His primary role looks at creating organizations that get funding from the government. Guarding Against Pandemics is founded by none other than Sam and directed by Gabe. They have tax-exempt status 501. Guarding Against Pandemics raises money as a super PAC. They raised almost $400,000 for the Democratic Party from June 1st, 2021 to October 19th, 2022. Not only that, Sam pumped $40 million into the Democratic Party just days before the election and before the beginning of the FTX collapse. Finally, there is Sam's aunt, Linda Fried, who is a WEF member on the Global Agenda Council. Auntie Linda Fried is on the World Economic Forum's website as a scientist in epidemiology from the Johns Hopkins Medical Institution. As a side note, you might remember Johns Hopkins took part in the pre-pandemic simulation that ran before the actual pandemic came out. As you can see, the Bankman-Fried family has deep globalist connections and elite democratic connections that have deep pockets. Now, what about some of the others who were part of the FTX group of companies and the FTX machine? First, we have Caroline Ellison, which happened to be Sam's girlfriend and Alameda's CEO. She is the daughter of Glenn Ellison. Glenn Ellison is a professor at MIT. Gary Gensler is also a former professor at MIT and worked under Glenn. As we know, Gary Gensler happens to be the head of the SEC. We have the Chief Regulatory Officer of FTX, Dan Friedberg. Dan is the one who is in charge of regulations, but has a very shady past with Ultimate Bets, which was a poker site that was accused of having a God mode, where they could see the poker hands of all the customers and players. It was basically a software backdoor, very similar to how FTX could see all of its customers' trades and stop losses. So let's briefly recap. Sam's parents are Stanford professors who specifically work in areas of trying to ban cash and enforce tax policy. They are also major Democratic bundlers that raise money to donate to super PACs. Sam's brother also started a business that will hopefully get money from the government and then in turn donates lots of money back to the Democratic Party. Sam also has ties to regulatory bodies with his girlfriend's father Glenn Allison, and Gary Gensler, head of the SEC. Not only that, the FTX exchange was started just after Biden announced he would run as president, and then they became Biden's fourth largest donor to date. I don't know, maybe it's all just coincidence, but at some point you go, how did we not see this coming? In addition to that, Sam has ties to the World Economic Forum, which was stated on their website, but that has since been taken down, along with his aunt and his brother who were involved in pandemic-related research and funding through the Democrats. Wow. So as you can see, some would say this was an intricate, well thought out plan of people, placements, and personnel. How did all of this go under the radar? Now that we see the deep web of people involved, let's look at the events that took place to bring FTX to such great heights and the crypto ecosystem to such great lows. FTX created their FTT token with a sister company, Alameda Research, and pumped it out of nothing. With these fake tokens, they were able to create value, which then they used to borrow cash against. They took that cash and started manipulating markets, using it for sponsorships, lobbying, bribing, and consolidating and bankrupting crypto companies. How did SBF fool everyone? I mean, we had BlackRock, Sequoia, some of the biggest investments in on it. Well, besides behind the scenes handshakes and phone calls, let's look at what was plausible. 1. Let's look at the corporate structure of FTX. It looks like a computer motherboard. With just one glance, you would think this is a 100-year-old company with a bunch of seasoned people at the helm, not just a bunch of 20-somethings. This takes time to make up. Also, when you create something this complicated, it's meant to create an aversion to serious investigation. A complex legal structure gives the illusion of professionalism at first glance. 2. Create a lot of social proof and hype. This was the real motive here. The media loved FTX. They blew them up. They were basically crypto elites, so to speak. Every financial person was talking about them. The big VC firms, Mr. Wonderful, Kevin O'Leary, they all got on board. Not only that, they got athletes like Tom Brady and his wife invested and on as spokespersons. Also, financial elites like Jim Cramer from Mad Money said SBF doled out credit lines to save institutions and that he was the new JP Morgan. King, an amazing guy, super smart, so everyone started building him up. Fortune magazine ran a cover on him calling the next Warren Buffett. They named sports arenas after FTX. Literally everybody was trying to say this was the smartest guy. This was the next crypto financial king. He was rubbing shoulders with celebrities and politicians like Tony Blair and Bill Clinton, and the list goes on. Once authority and legitimacy were created, it was time to start pushing to consolidate power and take over the cryptocurrency space. This is exactly what Sam started doing. While he was doing PR and rubbing shoulders with regulators and politicians, he started laying the groundwork so he could become the main regulated cryptocurrency king. Things like getting approval to be the only crypto derivatives exchange in the US. But the big move started happening in May of 2022 when Terra Luna collapsed. When that happened, it was a domino effect, and Terra Luna took down everybody else one after another. First, it spread to Three Arrows Capital, which spread to Voyager, and then spread to Celsius. As it turned out, SBF is responsible for the Terra Luna crash, which started the cascading events. CZ, the founder of Binance, suspected that SBF intentionally did this. Sam moved funds from FTX to support Alameda because Alameda was caught up in this carnage. This is when he used the back door to access customer funds from FTX and fraudulently moved them over to Alameda to prop them up. US regulators have also been after Tether, which is a US stablecoin. It's the largest and the oldest US dollar stablecoin, but it's not backed by a US company. The regulators don't like that and they want to capture all of the stablecoin market, but haven't had much success in attacking the cryptocurrency stablecoin. It's possible that they took another route to get after Tether, since Tether had loaned over $1 billion to Celsius, and Celsius loaned out billions of dollars to other crypto companies. There were billions of dollars of exposure, and it was a perfect way to take out big players in crypto, as well as take Tether down. With Tether gone, USDC by Circle, which is owned by Goldman Sachs, would become the leader. Unfortunately, this hasn't happened yet. 4. Fast forward to November of 2022 and the last phase begins. The final attempt to destroy the rest of the crypto market with the collapse of FTX after the election. Once FTX completed its final $40 million donation to the Democrats prior to November 8th, it all came crashing down. With the failure of FTX, crypto regulation can now be fast-tracked, and the next series of big ripple effects in the crypto leverage market would spread to the remaining major players in crypto. Fear will run wild and people will run from crypto as fast as they can. I'll let you draw your own conclusions, but I believe what comes next is massive cryptocurrency crackdowns. Elizabeth Warren is already shouting from the rooftops that we need more regulation. We see Treasury Secretary Janet Yellen tweeting, everybody is going to be demanding regulations to protect customers. The White House had press releases like this one.
Proper oversight. Cryptocurrencies, it risks harming everyday Americans. So this is something that clearly we monitor and that we see as an important issue. But the most recent news further underscores these concerns and highlights why prudent regulation of cryptocurrencies is indeed needed.
As the weeks go on, the losses from big and small crypto finance companies will continue to emerge. The latest upset to date is Genesis and their parent company Digital Currency Group, which are big casualties. They hold investments in 165 public companies. They also hold Bitcoin for Grayscale, which will make a big impact on stability and price. This is going to crush crypto for a while, which I believe was exactly the intent and why FTX was created. Crypto will continue to be under heavy scrutiny, and I believe almost all cryptocurrencies will be likely labeled securities, Ethereum being one of them, which I touch upon in this brief video here. Bitcoin will remain king as it's a commodity, and that will not change. After looking at all of this, it appears this is a very well executed plan that went off without a hitch. Sam was on a first-name basis with powerful politicians, pushing for crypto regulations on his terms and in the good books with government regulators. All of this could be the reason why Sam and the gang aren't in jail yet and might not ever see a prison cell. Crypto is extremely weak right now, which is a perfect time for the government to usher in its so-called digital currency replacement. The next step is to understand what this means for you, your money, your financial independence, and to help you understand what you can do about it. That's why I want you to watch this video next, where I go over all 4 of those things. If it isn't up yet, then it will be soon. See you there.